Hi, I am Charity Daniels. I'm a realtor with Keller Williams Realty Coastal Area Partners here in Savannah, Georgia. Our journeys around the sun are not without their trying and uncertain times for everyone. Unfortunate and unplanned circumstances have and will continue to happen to people. Due to COVID-19, unfortunate and unplanned circumstances are affecting many people all at the same time. Actual job losses or the threat of job losses across the country and the world have people asking, what happens if I cannot afford my mortgage? Interestingly enough, this question, on several of my social media accounts. I've seen it in the news. It's what I'm hearing. What's going to happen to the job market? What happens if I cannot afford my mortgage? Well, we're going to discuss that a little bit today, but first I must give you a caveat, a warning. I am not a lender, did not spend the night at the Howard Johnson's last night, and other than working in the housing industry as a realtor and being a homeowner myself, I have no more knowledge of the mortgage process than most of you. So my team and I did what we do. We researched mortgage forbearance programs, the good and the bad. Following is what we discovered. Hope it is of help to you. A mortgage forbearance agreement is an agreement made between a mortgage lender and a borrower in which the lender agrees not to exercise the legal right to foreclose on a mortgage, and the borrower agrees to a mortgage plan that will, over a certain time period, bring the borrower current on his or her payments. So in this agreement, the lender agrees to reduce or even suspend mortgage payments for a certain period of time and agrees not to initiate foreclosure during the forbearance period. The borrower must resume the full payment at the end of the period, plus pay additional amounts to get current on the missed payments, including principal, interest, taxes, and insurance. So the terms of the agreement vary amongst lenders or service providers and the situations of each borrower. So what do I mean by terms? That's the length of the forbearance period allowed, the amount of payment required during the forbearance period, whether the lender will report the forbearance to credit bureaus, and how you'll repay the lender after the forbearance period ends. Is it a lump sum in 4 months, or will your mortgage be increased for a certain amount of time to help make up the missed payments? Those are the terms that you have to discuss with your mortgage servicer. So the mortgage forbearance agreement, it is not a long-term solution for borrowers. It is designed for borrowers who have temporary financial problems caused by unforeseen happenings such as temporary unemployment or health problems or something else that causes a disruption in your life. Borrowers with more fundamental financial problems must usually seek remedies other than a forbearance agreement. So what else do we know about the forbearance agreement? It allows a borrower to avoid foreclosure until his or her financial situation improves. Okay, let's look specifically with the coronavirus. This outbreak has triggered forbearance help from Fannie Mae and Freddie Mac, all part of the CARES Act. So Fannie and Freddie released essentially identical sets of guidelines for borrowers and lenders about single-family mortgages. Number 1, homeowners adversely impacted by this emergency, these are in the words of Fannie Mae, may request mortgage assistance by contacting their mortgage servicer. Woohoo! That's also your lender. I'm using those terms interchangeably. Mortgage forbearance provided to reduce or suspend payments for up to 12 months. Foreclosure sales and evictions are suspended for 60 days. Freddie Mac specifically lists the date as at least May 17th, 2020. Lenders must suspend reports to credit bureaus of past due payments for borrowers in a forbearance plan. That's not everybody, it's those that are in a plan. No penalties or late fees for homeowners in a forbearance plan. Again, those in the plan. After the forbearance, the lender is mandated to work with the borrower on a permanent plan to help maintain or reduce monthly payment amounts as necessary, including a loan modification. That is according to Fannie Mae again. So, is mortgage forbearance right for you and your situation? It can seem like a really good idea to hold on to your cash in case you need it. And how do you know? How do you know what to do? You have to do your research. Your situation is not just like your buddies. You have to ask the hard questions. So along with this video, we will post links to various websites that we found to be helpful. We hope they help you as well. Should you deem mortgage assistance necessary or you want more information, please pay attention to the following tips. There is a pattern to these. Number one, do not take advice from your fellow keyboard activist. They mean well, but may not be most informed unless you're actually Facebook friends with your mortgage servicer. Know your loan type and details. Is it FHA, VA, USDA? What type of loan? What are the details? Where are you at now? Gather all of your other financial details, information on any second mortgages, current income information, current debts, any required payments. Know your financial situation. Expect wait times when you call your mortgage servicer. Do not skip a payment. Call your mortgage servicer first. Beware of third-party help. Call your mortgage servicer first. Call your lender and discuss the terms of a possible forbearance agreement. So, we don't know what the future holds. Stay in touch with your mortgage servicer. What does all that mean? In short, call your mortgage servicer with all questions and concerns. So, what can my team and I do for you? I've already stated, we're not experts on mortgages. And we are also busy answering similar questions to you and your family. What will help my family today and tomorrow? Should you need help with purchasing or selling a home, or discussing purchasing and selling a home in the future, whether it's 6 months or 12 months, we would love to have that discussion with you because that is actually what we do best. So one last question, who do you call about your mortgage and questions about your mortgage payments? That's right, call your mortgage servicer or the person who's handling your loan. Whoever you're writing that check to, that's who you need to be calling. Would love to hear from you. Would love your feedback. Have a great day.